Good morning. The market seems to have provided much needed upturn as the Navratri festival begins. A smart recovery on Monday and a stellar rally on Tuesday could be followed by a choppy day ahead of the F&O expiry on Thursday. The start is likely to be sluggish due to indices of Asian markets. US indices also closed off day's high. Multiple resistance levels are placed in the zone of 4,990 to 5,030 and the rally can be sustainable if the Nifty closes above 5,030. European stocks continue to rally due to growing optimism about Eurozone leaders' effort to prevent Greece from defaulting. The Greek parliament passed a new property tax law as part of its austerity drive, sparking fresh rounds of protests. Votes are expected in Germany, Finland, Estonia, and Austria on whether or not to ratify changes to $600 billion rescue fund. Overall details about Europe's plan to contain the credit crisis are still sketchy and vague, leaving ample scope for disappointment. So betting too much on decisive steps to nip the Eurozone troubles in the bud could prove to be risky. ONGC has given its consent for stake sale in Cane India to Vedanta Resources, provided Cane Vedanta and their affiliates enter a formal agreement with the PSU on royalty and cess conditions. The government has put on hold the share sale due to volatility in the stock markets. In August, the 8 core industries grew at their slowest in 11 months at 3.5%, down from 7.5% in July. The RBI issued revised draft norms to regulate the growth in securitization of banks' loans. This may increase the securitization of retail assets like home and consumer durables. A government panel has said there should be no restrictions on FDI in the 470 billion rupees pharmaceutical sector. FIIs were net buyers of rupees 340.8 million in the cash segment on Tuesday, according to the provisional NSE data. The domestic institutional institutions were net buyers at rupees 2.7 billion on the same day. FIIs were net buyers of rupees 27.82 billion in the F&O segment. The foreign funds were net sellers of rupees 10 billion in the cash segment on Monday as per the SEBI website. Mutual funds were net buyers at rupees 371 million on the same day. Moving on to recommendations, the technical calls for the day are: we recommend buying Tata Chemicals in the range of rupees 322 to rupees 323 with a stop loss of rupees 317 and for the target price of rupees 335. We recommend traders to sell JSW Steel October futures below rupees 607 for an initial target of rupees 591. It is advisable to maintain a stop loss of rupees 614 on all short positions. Our derivative strategy for the day are: short Tata Steel October futures between rupees 442 to rupees 443 for the target price of rupees 431 and a stop loss placed at rupees 448. Long Neyveli Lignite October futures between rupees 80.5 to rupees 81.5 for the target price of rupees 84.5 and a stop loss placed at rupees 79.5. Thank you. Wish you have a great day ahead.